Paul, you're in the middle of the real job market. I mean, you're finding people, placing people. How does it look from where you are? What have the changes been in the workforce?
Well, for the past 17 years, we've seen, some ebbs and flows in the job market. We deal in finance, accounting, technology, creative individuals, legal, as well as high-end administrative staffing. We're finding that if the number is 4.1% unemployment last month, about half that number, or about 2%, is the actual unemployment rate in the areas in which we serve. We're finding the demand is extremely high. And we're finding the companies that are really, looking for people for a long period of time are getting creative in the way that they're searching. Say, for instance, more heavily weighted towards cultural fit and soft skills fit, and about 75% of the job description being used as kind of the benchmark, because no one's finding 100% of the job description these days. So they're getting very creative in the way they're searching.
So, Paul, that's an interesting point. How is that then translating into wages?
We're finding that, well, for instance, let's take a CPA with a couple years experience. That individual is getting multiple offers. So it's driving the market higher. And it's been that way for the past few years. We're just seeing it now become more of an issue, where companies might say, okay, I'll take somebody with a year experience, try and sit within my budget for the hiring budget, and then train up. They're investing more in the training aspect of the individuals.
Meaning that they can actually get people who are mostly qualified and for less. Yes. So, Alan, walk me through how that will then hold down the wages even though we're at full employment. Where are we then in the cycle of employment?
Well, I think we're pretty close to full employment, but what we've seen is growth in temporary help over the last 25 years, which is one of those changes in the labor market that I referred to earlier. So, if you go back historically, when companies would hit a bottleneck and they had to raise wages for one narrow occupation, because of horizontal equity concerns within the firm, they would raise wages across the board. They would raise the whole pay scale. But now what companies are doing increasingly is they reach out to temporary help firm or a placement firm, outsourcing firm, and they could fill those bottlenecks but not raise the whole pay scale. So I think that's one of the reasons why wage growth has been more sluggish in this recovery than it has been in past recoveries.